Bitcoin flash crashed to $40,400 in the middle of the night. We have seen Bitcoin struggling to kind of get above those resistances, specifically around the 50 EMA, 50 SMA, and as a result, we saw rejection and we saw a fall to the downside. In today's video, we are going to be jumping down into the world of Bitcoin's technical analysis, sharing my thoughts and opinions on with what I think is going on. Let's roll that intro and get right down into it. Okay guys, so here we have a Bitcoin paired up with USDT. We are on the 1 hour time frame to start with, and we are using Binance as the data source. Now, following on from the previous videos that we've been doing here at 𝗕𝗘𝗪𝗀𝗀, we were targeting out this little area just here, this little yellow box. Let me zoom in to make this a little bit bigger for you guys. Right here, it's at 44,936 to 45,309. Okay, we were looking at this as a fifth wave movement. We're trying to track up here, and it does look like we actually truncated, meaning that we fell short of our target with our actual high just here at 44,700, and basically just breaching that wave 3 high point, as you can kind of see. Now we're looking at this move to the downside and holding and hoping that we'd hold strong right here at 43,554 to 43,706. Of course, it did not hold. We lost this and we came all the way back down. This now means that our fifth wave is complete up here in a truncated structure, which is this fifth wave movement also truncating, and this one, which is our overextension. We'll talk more about that on the daily. Okay, so this now has our reversal in here. So we can see that doesn't look like it's just done yet. In my opinion, I think this is a contracting diagonal. Let's go ahead and check. Okay, because it does look like a 5-wave move. So we can see here, I'll show you what this looks like with the WX, Y, X, and Z, right? It's a 5-wave structure. And if we go ahead and use the trend lines in here from the top down to here, and then from the low to the low over here, and I'll expand this out just a fraction. You can see how it contracts in. We bounce up in a 3-wave fashion here, 1, 2, and 3, or W, X, and Y, with double top situation on the W and the Y, and then we fall down. So to me, this now looks like a very, very deep retracement. We'll go ahead and show you what that looks like with the fib tool here. Put this onto that double top. Here you can see it comes down deeper than 1.236. And yeah, for the most part, I think, yes. Actually, I don't think that is a WXY. Let me just do 1 sense check here, because looking at it, that double top is still this one falling just short. Let me just check. The high is 44,000 and yeah, you can see right here, in fact, if I zoom in, it doesn't quite reach that double top. So it can't be a double top, can't be a well, it can be double top, but not WXY, meaning that we have a 3-wave move actually just here. So it's actually a lot shorter than you think. This will be a wave 1, this will be a wave 2. And then you start to really pull back down. So let me show you what that looks like. So at the top here, we have 1, 2, 3, 4, and 5 in our contracting diagonal. Then we have a wave 1, wave 2. All of that is a wave 3. Up here for 4, we've got to have that 5th. So I don't think this is over just yet. Unless, of course, you know, we want to kind of see a 5th wave in there, which is possible. I'll jump down into a smaller time frame in a second. If we haven't, then we'll be looking at a move still deeper, potentially into this final 5th wave, which typically would be between 1.236 and 1.618, 39,125 to 39,908. That would be there. Let's go and take this into a 5-minute chart. I just want to see whether we have a 5th wave. It doesn't look like it. 1-minute chart, because we're complete degens. Not, of course, just a joke. But obviously we can kind of see on the 1-minute time frame, possibly you might be able to see that as yeah, you could possibly see that as a 5th wave. I just don't think it is. I think we've still got a lot more to come. So I'm going to leave it like this, because I do think this is the most likely, indicating that we have a 39,125 to 39,908 potential here. This, of course, will not be the end of it, though. This is just the wave 3. I would have thought it would just be the wave 3. It's possible that it's a bigger wave 4, but if it is just wave 3, then we obviously are still going to be looking at deeper retracements like this, coming down deeper. And of course, if you start with 5 waves, you end in 5 waves, meaning it would have a bounce, but nothing more than that before coming back down in another 5-wave structure. So from a smart money, from an Elliott wave theory point of view, everything here is tracking interestingly as a reversal in the market. Now, from a smart money concept concepts point of view, we can see we've had change of characterization, right? So we can see right here, we are now in a bearish state of play. We haven't had a break of structure to confirm this yet, but it has now broken all of those bullish structures on this hourly chart that were triggered over here on the 15th of November. Okay, so this now changes our structures on what we've been seeing and what we've been talking about and what we've been expecting and all that kind of stuff. So now we have to kind of, take this for what it is. We've changed the structure. It is now bearish, not bullish. We have the fair value gaps here from that have been left behind under the kind of institutional level candles dragging that market to the downside. I was kind of talking about this in yesterday's video about how the moves to the upside are only really being supported by retail investors. They're not really being backed by larger institutional level investors, right? We see the wallet counts decreasing on larger investors and increasing on retail or smaller wallet sizes, i.e., 1 Bitcoin or less in their wallets. They're increasing, but as soon as you look at 10 Bitcoin or more, they're decreasing. So we know that the move to the upside was only supported from retail investors and basically no larger investors really that interested in holding Bitcoin, which is interesting. So if you haven't checked that video out, check it out. It was put out yesterday on the channel. And so here we can see we've moved right back up to equilibrium. I expect rejection here. Momentum indicator is giving the idea that we have momentum to kind of rally on upwards. Be interesting if we do. We'll be looking for a move above this swing high or swing low, however you want to look at it, at 43,584. That's where price would have to go higher than to kind of break out of this structure. Failure to do that, then of course we look to the downside. So smart money concepts, Elliott wave theory, all looking pretty bearish. EMAs, SMAs also bearish, right? We're now below the 200 hourly EMA. Price actions below there. We're also below the 50 EMA, the 50 SMA. So that's not looking strong either. Anything above those areas might give us some hope, but for now, I guess bulls will be targeting out 43,584 and bears will be targeting out to get the price lower than $40,000. So that's kind of where we sit on the 1 hour time frame. Take this to the daily time frame and you can see we kind of look to finish off our area, right? So a few weeks ago we were talking about how 42,978 and 45,456 is the higher range, the range where we're seeing higher areas of resistance. We can also see that this is where we've just been rejected from. Okay, now this is not a clean rejection because in an ideal world, what you want to do is you want to see one candle in and then a straight candle out. That shows you heavy resistance. Here, we actually kind of consolidated in there for a little bit. This basically indicating to us that this resistance is there, but it's not massively strong, as in, we were kind of consolidating in this range for a bit. Now, we obviously have been rejected. We've got a big wick. This wick in itself is actually quite bullish because it shows that there's a lot of pressure for buying right down here. The question becomes, are the bears going to drag it down and soak through all of those buy orders to take price even lower? This at the moment is a strong sign that Bitcoin might find support, specifically at the area here that we have highlighted, right? This is another interesting zone for us, coming in at the 39,600 to 40,023. This is an area of interest based on this previous area of support. Okay, so coming back here is going to be quite cool for Bitcoin to see whether or not it can kind of find that upper area of resistance. It looks like we've completed the fifth wave of the fifth wave, which is our expanding diagonal, which is a big structural point from where we saw this corrected 335 flat coming in on the 12th of October. So we can see we're finally finishing that. Now, obviously, it overextended. It was never supposed to go this high. And this rejection that we're seeing right now, it gives us the idea that we've probably topped out and we are looking for moves to the downside. Some interesting zones down here are a little bit lower, specifically around $35,000 to $37,000. And of course, down here, another fair value gap coming in at $30,000 to $32,000. These are going to be key areas for us, but it's not going to be quick. I imagine it's going to be taking quite a bit of time before we actually grind our way down there. But some better prices, I think, are coming. We can see that the daily stochastic RSI is starting to correct a bit, which is a good sign. We've still got to go quite a distance, though, on the weekly and the monthly timeframes. Again, just understand that the stochastic RSI does not represent price movement. It only shows you strength of the movement that is happening. Okay, so if you're rapidly moving from oversold to overbought very fast, then that move is weak. And if you go from overbought short to oversold very fast, then that is also quite weak. So here we can see that this big candle coming down has dragged the stochastic RSI a fair chunk. That shows us that there isn't a huge appetite for movement to the downside, and momentum isn't really supporting this move, meaning that we are more than likely going to find support and bounce from it. Okay, that's what the daily stochastic RSI is telling me. The weekly and the monthly, though, is telling me that this move has barely even started, and we potentially will be seeing significantly lows. It means that we'll probably find some support, bounce a little bit, but still go on down deeper on the longer term. So none of that's really changed on that macro level. From a kind of smart money concepts, we are still technically in a bullish structure on the daily time frame, but I see this now as a reversal. So it'll be interesting to see how quickly that can turn on the smart money concepts side of things. EMAs and SMAs, let me turn them on. You can see that we have the 50 EMA, 50 SMA down here on the lower trend line, and the 200 EMA right inside our fair value gap at $30,000 to $32,000. So all of that is still to play for. Take a look at the weekly time frame. You can see that we're tapping the higher range of our parallel channel, getting rejected. Again, pretty standard stuff. Looking at the low side of the channel, coming in at around 28K, we have the EMAs, the 50 EMA, the 50 SMA, and the 200 EMA. That's going to be the area of interest mainly for me as we look to kind of come down towards 30K, as 30K is going to be the main area, as you can kind of see with this one right here, 30,330 to 31,818. This is previous resistance that we broke through but never tested. So this is going to be the interesting range to see whether or not we can come down and test it. Lose that, of course, then we're talking about moving down to 24, 26, and lose that, then talking 19 to 21. So my main focus, guys, really is to kind of see how we react at 36, 37, how we can react at 30, 32, and see where support levels are found. But ultimately, as you can kind of see on the weekly stochastic RSI, not even a dent has been made in this. Last time we saw a pretty decent correction. The time before that, we saw a very, very deep correction on the stochastic RSIs and price. Obviously, the monthly is also very much overbought, so we do want to be aware that things here are not as good as we would like them to be. The last time that the monthly chart was this overbought was at was actually at $65,000. So we want to be aware that the monthly stochastic RSI, it can, it doesn't represent price. You can see here that we moved down very rapidly. We went up into a new all-time high. We were oversold when we started to see the drop from 69K downwards, right? Just be aware, though, that this is going to be a big indication of things to come. Every time that we've ended up in an overbought area, we have had a 50% or more drop for BTC. So just bear in mind that although it doesn't guarantee us anything, we are up in this higher range where every time previously we have done this, we have seen a pretty significant drop in the price action of BTC. Okay, so just bear in mind a good healthy correction would, in my opinion, be a 40 to 50%, as this is something that we have seen time and time again, specifically in the previous bullish markets where we have these 40% moves, which are very, very healthy in relation to where we have been previously, where in last bullish market we didn't see that. And I think that's mainly because we had so much more money being printed that we didn't actually have time for those healthier corrections. We saw 20, 16% kind of corrections in the 2021 bull market, but in 2017 40% was pretty normal for Bitcoin. Now obviously price action is vastly different, so I don't expect us to continuously have 40% corrections. I think, though, considering the positioning on the stochastic RSIs, the RSIs, we should be expecting pretty healthy correction of about 40%, which will then line us up nicely for that next big surge to the upside, where we'll see more 15 to 20% corrections during those surges to the upside. So when we take a look at this, it's all looking pretty decent. On the divergence indicator, nothing major here. On the monthly, from a weekly standpoint, nothing here outside of what we've recovered before. On the daily time frame, if we go down into our divergence, you can see we've got bearish divergence right here now coming in, and so bearish divergence, and we're seeing this down turn here. So all looking pretty good. I've been in a short position for quite some time. I'm continuing to hold my short position, even if we come back up. I won't get liquidated. My stop loss is well, my liquidation price, I should say, is just so ridiculously high. It's just not going to get liquidated. So I'm going to hold this and see how it kind of goes. I am looking for 30K for my kind of take profit range. I think that's going to be where I probably will call my short. So yeah, I think there's a lot of potential here for Bitcoin to come back down. That's going to give us huge opportunities for further development within the space. So guys, I think that is going to wrap up today's video, sharing my thoughts and opinions with what I think is going on. If you have found it useful and informative, smash that like button. Really do appreciate that. If you are new to the channel, why not go ahead and subscribe, and I'll catch you all in the next one.